Hey all, we're gonna just wait a couple minutes for everyone to join, then we're gonna go. Okay, just one more minute and we are good to go. See, if you're here, please just say that you're here in the chat so I know that everyone is here and we can start. Just say hello, I'm here. I see Björn. So I know there are some others here as well watching now. Should be around 4 people, so just say hi so I can see your name in the chat and I will know that you're around and we can start. So I'm gonna just go ahead and start slowly. We're gonna talk some price action. I'm gonna talk about some lines, and I hope you see my charts. You can change the settings to HD so you can see everything clearly. Hey Alexander, hey Gabriel, hey everyone. Björn, everyone's here, good. So then we are good to go. Let's go ahead. Let's see here. We're going to talk price action. Do you see my charts clearly? Do you hear me good? Let me know. I'm going to just link to some others so they don't miss out, and we can begin. Okay, so if you have any questions, let me know. Yeah, I just changed to white candlesticks because I just wanted to talk about price action so we can focus on the candles instead of the colors. So we can change that back. They're just gonna focus on what happens with the price. So for example, here I'm gonna quickly give you an analysis. We have the 5-minute charts here, but even if you go to a higher time frame, you can see the same price action, but it's easier to see on the 15-minute. You got the price was moving up, right? And after that, it reached a resistance. It's put out line here, adjusted, and it started to move down, so it made a lower low. Here you can see the line connects the lower lows, and you can see the lower highs as well. So now price is reversing, it's going back. So lower high, lower low, that's good. So we connect 2 dots and then we wait. So in this case, price was not completely making a lower low, but then it reversed down and broke this area that used to be support. You can see this, right? So it broke the support here and continued to make a lower low. So since we have our target, we could use this knowledge to trade. And in this case, you can see that our target was this lower line based on the lower lows. So even without using any colors of the candlesticks, because we just, in this case, we are focusing on the price action. And this is just for advanced traders. You don't have to use the same colors. I have other charts as well that look more normal like this one. So it doesn't matter. Hello, Arthur. Good. We've just started, so you haven't missed much. This is your USD. Please change your settings to 720 HD so you can see clearly. And this is your USD. We are on the 15-minute time frame right now. As you can see, we were talking about how I connected the lows and highs to make this channel here. Price was moving down after the uptrend was over. In this case, I'm not saying the major trend is over. It's not. Probably it will reverse. And you can see our target is reached. So we set up a target. We know the support got broken. We see the pattern here. There's a pattern. What is the pattern? As I said, the pattern was that price was moving up before, and then it broke after the resistance. It broke down, continued down, and made a lower low, a lower high. Okay, lower low, lower high. So now we have two dots, 2 points to connect. So we got this channel. You can see how accurate this was, because when you came online, price was just coming down, and you can see how it's bouncing off. So I drew this before price was anywhere near. Sometimes I use stochastic to confirm these areas that support resistance is overbought or oversold, so that I don't get in a reversal. So stochastic is really great for confirmation. Stochastic has many uses. It tells you about divergence, convergence over the time frames. So I got this question. If you just joined, I got this question about if I use any indicators. I use sometimes stochastic, and sometimes as a help, I use an EMA to see if my line is good. But I usually use the candlesticks themselves. That's enough, because it gives you enough information. So if you're new, we're just talking about setting up your targets, setting up your lines, because a trend is a relative thing. You might say it's an uptrend, but then someone else might say no, but that's a downtrend. So if we look at, for example, our hourly time frame, you can see today's price have been going up. And if you had your targets, you know, okay, it's probably trying to reach the previous target, which was in this area, but it failed. You can see that it failed here. The sellers in this region got in, pushed the price down, and then it made a second attempt. It failed again. So now you can see on the lower time frames, it's making the lower lows, the lower highs. Any questions so far? And the reason I'm using white candlesticks is because to show you that we are just focusing on highs, lows, support, resistance, and I'm going to show you with the colors. So I get a question about why I prefer stochastic instead of the relative strength index, or why not use them both. Because I did use them both. I used to have this Okane's 15-30-minute strategy that I created when I was a beginner, and I realized the RSI is just telling the strength, and the strength is already being illustrated by the candlesticks. So the candlesticks already tell me about the strength, and the RSI is just delayed. It's calculating based on those candlesticks. So if I can see what the candlesticks are doing, I'm already doing good. So I don't need the RSI. But the stochastic, however, I like it because it helps me confirm my lines. It helps me confirm the strength of my lines. If I have 4 or 5 time frames saying stochastic is overbought in this area, then I know there's a big chance it's going to continue to my next target. So I love the stochastic in this sense, and also stochastic is good for divergence, convergence. Of course, you can use RSI the same way, but I prefer stochastic, just something I'm used to, and I like how I can predict whether the stochastic is going to become overbought or oversold based on the next candlestick. So the way I'm using the stochastic differs from how a beginner uses it. Beginners wait for the stochastic to tell them what to do. I know that stochastic is going to be oversold or overbought at the next touch because of the candlesticks, the volume, the number, how much they move. So that's how it works. So I got a question about why don't I use 5-minute time frame. I use all different time frames, as I said. I'm going to show you that. If you watch my 2 previous videos, you would see that I placed a target on the daily charts, for example here, because I saw price was moving up after divergence. And what do I mean by the divergence? Because you can see the price on the daily chart was heavily trending down, 1 touch, 2 touch, 2 points connected. And then here it was accumulating, then it broke up above this line. After it broke up, you can see it starting to create lower highs, and then it reached this line. So I had a trade at this line, a put option, and I'm going to show you that. We go to the 15-minute time frame, you will see that clearly. If I can find it, was further back. Okay, here it is. I took a trade. Let's see, where was it exactly? I think I adjusted. Let's get down a little bit more. It's difficult to find. I have it on picture, I can show you. But I still had, regardless, I had a 15-minute or half an hour time expiry at that area, even using a daily time frame. So it doesn't matter. What you want to do is to find a strong position for a trade. So sometimes it can be a 5-minute time frame, sometimes not. So let me show you a trade I took. Let's see here, just before we got started, I took a trade. Okay, I took a live trade. I'm going to show you that. And I'm going to show you a couple of live trades based on currency correlation I took yesterday. The ones of you who were online Monday night, GMT +2 Monday night, when the markets opened, you know what I'm talking about. So the first trade was a USD JPY trade. Let's see if I can show you that. Let me know when you see it. I think I can see that. Sources. Okay, so do you see that? This was the USD JPY trade. So why did I take that? How did I know? Okay, so let's see how I took the trade. And in a minute, I'm gonna also show you my live trade that I took. So USD JPY charts, let's bring those up. And here you can see I have the stochastic down below. And if we can go to a 5-minute time frame, it doesn't really matter. So here I actually used the 5-minute time frame because it was easy to see. So what do you see in this picture, guys? What do you see in this picture? You see that the charts on Monday opened at this line here, okay? Slightly lower actually. The price opened here. And what happened? It dropped down. So there's a gap. This is what we call a gap. Look what happened. Last Friday, price closed here, and then it opened up there. Okay, it closed here, opened up there. This is called a gap. So it was falling down, and then it was coming back up. At the same time, Euro USD was going down, was about to break a support. So let's bring up the second chart here so I can show you both of them. Any questions so far? So both of them based on the 5-minute time frame. I took a put option here on this candle, and I took a put option here when the price touched here. So this is currency correlation. You see one is going up, the other one is going down. Yes, sometimes there is a gap. Bjorn asked a question about the gap. Yeah, usually the gap comes after the markets have been closed, because the sellers or buyers in the market, they open the price at a different price level. So my trade just expired. I'm going to show you that in a moment. Okay, so but first let's go through this. Why did I take these two trades at the same time? So you can see the support, right? Everyone does see the support here in this area. You see that price came down. It touched the support. Sorry. Touched the support here, bounced back up, came down. It had a tendency of breaking, and then I had my line here, my target, lower, below, and I saw that while EUR/USD is moving down, USD/JPY is heavily bullish. It's trying to get back up to the gap to where it opened. So this is what usually price does. It tries to get back to same areas after retracing. So it's retracing back actually to the resistance. So when I saw this, I knew the correlation. Okay, USD/JPY is moving towards this target while EUR/USD is moving towards this target. So I placed the put option for which closed on this candlestick here, on this red candlestick here, okay? And just a minute later, USD/JPY hit this area, and I prepared. I was already prepared for a 10-15 minute. I think I took a 10-minute trade. You saw that on the picture I shared earlier. So that was the two trades at the same time, thanks to currency correlation. You know this one is moving towards this target, so the next one is also moving towards this target. So it helps me confirm. So now let's get back to the trade. I was talking about the live trade that I took here on my charts. This is also EUR/USD. If you want, I can change the template to something with color so you don't get too confused. I know it's a little bit too much. If your eyes are not used to. So in this case, okay, you can see this. In this case, I took a trade. Where did I take this? Let me show you the picture so you know that I actually did take a trade. And there it is. Let me add it to. Okay, do you see the trade? You see where it expired, where it opened. I placed it 15 minutes before this live webinar started. 15 minutes before the live webinar started, and I gave it expiry of half an hour. I don't usually do big expiries like this one. You can see the drop was huge drop, huge amount of pips in the money. I get a question about whether it's risking too much if you are using two trades at the same time. Well, the pairs are not exactly always going to the pip the way that they're not that perfectly arranged, and also the thing is that you might get a good entry with one and not a good entry with the other one. So in this case, I was more confident in the USD JPY trade because it was going to drop from a resistance, and the other one was more based on a drop from a support, which in this case wasn't entirely confirmed, but thanks to the currency correlation, I could confirm that there was a high chance. Oh, yeah, again, I'm going to mention for people who are just joining, or whether you're watching after the webinar is over, please change the settings to HD or you won't be seeing anything. So don't leave me angry comments. Why is this video so blur? I don't see anything, because you should change to HD. So you see what happened now? Did I show you the trade? One more time, please take a look at the trade I shared. Everyone take a look at this half an hour trade, actually 29 minutes. No, sorry, it was exactly half an hour, 1730 to 1800 exactly. And you can see about 13 pips almost. So a good trade, very good trade. So why did I take this at this level? Anyone? Any clues? Any clues? So this is part of what I explained in the beginning of the webinar. What I explained was that the important thing is to set up your targets. Once you have your targets, you will have a good feeling of what the market is trying to do. So your targets are very important. So if we look at this, and why do I use the 15 minutes time frame? Because it's so easier to see. Obviously you can see it on the 30-minute time frame. It's the same thing, but it looks bigger when you go to the 5-minute charts, right? So if I go to the hourly, it's too crumbled. You see this? In this case, it's too crumbled, but so in this case, it looks much better on the hourly. But in the case for the for this trend line, it looks much better on the daily time frame. Okay, so going back again, why did I take the trade? I took it right here on this candlestick. Let's see, yeah, and it closed exactly at my target. So it closed when it a few minutes, I think 5-10 minutes after it touched the line, which got broken. Now you see it's now acting as resistance. We will see if the price comes back inside maybe before falling down, or it might continue down. So we won't know that yet. So we need to set up our next target. You can also see the support, right? Does everyone notice this? How there was support here. That's why price is bouncing. So you should always ask yourself this when you analyze price action, so you can learn from this. Does everyone see the support, resistance? I get a question, why not use a moving average? Because this is much more accurate. The moving average is just an indicator that tries to calculate the same thing that you can see much better with your eyes. You see price action is much more accurate than indicators. So you see the support, you can see it on other time frames as well. If you go to the 30-minute time frame, you see the strength of it, really. See the strength here? It's very strong. Also, it was a strong resistance before. So why did I take the trade? Again, I had my target, upper target, lower target. So I know price is making lower highs and lower lows. So in this case, the support here got broken. I saw that on the 5-minute chart. I actually got into this candle, so it retraced. It went against me when I entered the trade, because this candle closed below my support. I was thinking that, okay, now it's falling. So I entered at this candle when it was about to fall. It was making lower lows, and then it broke, totally went against me for a few pips. and then it eventually dropped. So that's why I give it so much longer expiry than usual. Have I been taking a 10-minute expiry? 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, a 10-minute would have won in this case, but a 5-minute would have lost. So I wanted it to have enough time to reach my target here. So that's why I give it a half an hour expiry. So I get a question about moving average again. If I can add it, sure, I can add a moving average just to show you. The moving average 200 is there. I usually use 99 and 200. You see it's far away in this case, but let's see on other time frames. You can see that the moving average 200 in this case. That's why I like moving averages. Sometimes they can help you confirm your targets. But as you can see, the support line is much stronger that we drew by hand. It's much more accurate than the moving average in this case. See, the moving average is here. Support line is more accurate because it's based on candlesticks, based on previous history, based on what buyers will do in the market or have done in the market, so higher probability. So I get another question, how long expiry do you usually take? Well, on average 10, 15 minutes, but that question will not, that question is a hard question to answer. So my answer is not going to give you, I'm not going to give you the holy grail of expiries by saying, oh, my average is this and that. It's not going to tell you anything because you can go and do 10-minute trades and lose all of your trades. Because it's not about the expiry, it's about understanding the price action and also have reading the price action, seeing how price is reacting. So in this case, if you look at this case, for example, you see the support here, big, strong candle, jump, see, resistance, right? So far with me, Arthur. Look at this. And what happened when price dropped? Half an hour, right? After support got broken, half an hour. So this is what I did here. Again, half an hour. So I'm using previous data and also market intuition. And I was fearing that the retracement was not completely over. As you can see, it wasn't because it went totally against me all the way back up to resistance, which was up here, and then it broke down. So I could have had a better entry here once it was turning down, but I chose to get in here at the break of this candle. So I used previous data for the expiry. If there had been a lower low and then a high here somewhere again, then based on previous history, I might have taken a 15-minute put option. Yeah, I used stochastic, as I said. So in this case, I did take a quick peek at stochastic. Where did I enter the trade again? Let's see here. Okay, so on this candle here, right? No, I don't like MACD. I get a question about indicators. If I do solely by this line, sometimes, as I said, I use the stochastic to confirm. So in this case, the 5-minute was not oversold. None of them. So in this case, the indicator did not have any, was not of help, because if you look at the stochastic, was mostly oversold. You see this? Except for the 4 hour. 4 hour was not oversold, was moving down at the time. So most of the indicators, most of the time frames on stochastic were not overbought, but I still took a put option because I was going by price action, by support getting broken, by having my target, by having the trend, so the overall direction of the market. And it works much more accurately than indicators do. Because you have to remember, Indicators are just using the data you already see on the charts. It's not like the indicators have some knowledge from space or something like that, because I know many beginners think that way about indicators, that they have some hidden data that you can't find anywhere else, but you can. It's all in the charts and all the indicators. You look at the indicators, the settings, it always asks you what should the price field take into consideration, close, highs. So for example, if you take close, it will calculate based on the candle close and openings of the data. So it has to wait for the candles to close first. So that's why indicators can be lagging or leading. How do I identify support and resistance? Based on different time frames, I look at different time frames, look at the candle volumes, the number of touches. So in this case, you see it's the big volume here, and it's a mix of candle wicks and candle volumes, openings and ends. So the more the better. And also you have to have the overall feeling of the market. So in this case, it was moving down, so it was wise to take a put option. But if market is heavily trending up, you might want to use a trend line to trade with the trend. So so far with me, did you understand how we use targets? I'm going to show you the daily charts. I used this line here to take a trade recently. Let's see if I can find it. It was really hard to find. Because of how much markets has moved. Markets have moved so much. So type your questions. What lines don't you understand beyond the support resistance lines or trend lines? Oh, you mean these slopes? Yeah, these are the trend lines. So I had a trade here, for example, based on the daily chart, because it tells you if you're not using trend lines, then you should start using trend lines right away. They're absolutely amazing, and often they intercept a support line or resistance line for that matter. So you can see how price is trending and where exactly it's attempting to go. For example, in this area, lots of areas, there are trend lines all over the place. And sometimes it's easier to see the support, sometimes easier to see the trend line. And I told you I used them to set up my targets. In this case, we had the downgoing target and upgoing slope and the support and resistance line. So they all come together to give you data on what to do, what the market is trying to do. So let's see here, for example, I had a trade based on this candlestick. Here I had a trade based on the 15-minute time frame. I connected 2 points, and I had my next trade here. Let's zoom in a little bit. I can connect to that the way it used to be when I took the trade. The straight lines are support and resistance. They're based on opening and closes, and the trend lines are also sometimes used on opening and ends, but most of the times I place them on the highs. But there can be a mix, of course. You can see this, for example, in this case it was based on the highs, but also the candle openings and closing prices. So here I took 2 trades. You can see this, guys, right? The first trade on the 15-minute time frame here at this touch, the second one here, don't exactly remember where it closed, but it was, both of them were in the money before it continued up, so I didn't give it too much of expiry because I feared exactly what happened later, the breakout. So But you can see how these two lines could give me two winning trades later on without me doing anything else than opening my charts, taking a trade. Easy. So I'm gonna answer one more question, and we're gonna move on. Do I use weekly and monthly super resistance lines? Of course, it depends. I mean, if I go to the monthly charts now, and if I see that price is moving up, then obviously I'm going to go to the monthly chart to see the next resistance. But I don't have to use the monthly charts every day, because every day price is not going to reach the monthly candle, right? So I got a question if I use weekly and monthly, and this is the answer to that. The same with the weekly charts. But for example, if there is a big news event or something that moves the price a lot, then you have to go to weekly and monthly to see where the major resistance or support is. Sorry. Or if you wish to do a long-term trade. So for example, in this case, I would place it here maybe already in case price keeps moving up, and then I will adjust it later based on daily prices. So I think that explains everything. Björn asks if I can show how I analyze my chart. I have done that. Please watch my two previous videos. I made one prediction video during Sunday night. During Sunday night, I predicted what was going to happen. If you look at the video after that, the recap, I have explained what exactly happened, and you will see that how market reacted to my lines very well, reacted to those trend lines that I set up, and you will understand the meaning of trend lines. So watch those two videos, very short videos, will take probably 6-7 minutes of your time. Take a look at it. Final question: what times do I trade? Whenever I'm sitting here, whenever the market is good. It can be 4 in the morning, it can be 1600, 1200, 1300. So I don't care about sessions really, I just care about volatility. If volatility is good, giving me what I want, I trade it. If it's not, forget it. I did, Björn. I did this webinar was exactly what I did. I took your USD and I showed you how I acted, how I took a live trade. So I think I've already done that. I don't know what you mean if I don't want to. This is exactly what I did just now, what I've been doing for the past 45 minutes. And if you look at my two previous videos, I show you how I predicted using trend lines, and how the next video shows you how the market reacted to that. So it's a proof of price action working. So just take a look at it, take 6 minutes and take a look at it. And I just showed you a live trade on how to use price action. So I think that's enough for today. Thanks everyone for joining. Thanks for your support. Don't forget to like and subscribe. So I see you in the Skype group. Thanks again for all the great questions. Thanks everyone.